Hello everyone. Technical analysis is all about spotting trends, spotting directions in market move that persist. And when that happens, prices form higher highs and higher lows if they are in an uptrend, or lower lows and lower highs if they are in a downtrend. Some of those higher highs and higher lows, or those highs and lows, they produce something that we call support and resistance. And typically, we expect that those prices or those levels of support and resistance, once that they are penetrated, they become the opposite. In other words, if you have a level of resistance that was penetrated by price, then it turns into support. And because of that, it is extremely important for us to recognize levels of support and resistance. And one of the reasons is because for practical purposes, when we trade, when we buy, for instance, we want to buy against a level of support that is nearby. And when we sell, we want to sell against a level of resistance. In other words, we use levels of support and resistance to buy and sell. So the same thing applies with targets. Let us say that we bought a level of support, and so now where do we exit the trade? Obviously, we want to exit the trade where there is a level of resistance. And, well, that is why it's so important to identify levels of support and resistance. For instance, you don't want to make the big mistakes that most traders make, which is to buy when they have resistance just above. It's like jumping with the ceiling right above your head. You know that you are going to hit your head with that, right? So, and the same thing applies if you want to sell. You don't want to sell and you know that you have a level of support right below you. So it is extremely important to know how to find those levels of support and resistance. And today I want to show you a very sophisticated way to spot those levels of support and resistance using the cloud. And what I'm going to show you is a very impressive thing, because the levels of support and resistance that are typically explored in technical analysis are previous levels of support and resistance that are expected to serve again as support and resistance in the future. Now, the difference with the levels of support and resistance in the cloud is that those are invisible. And that is the reason why I call them invisible levels of support and resistance. And they are extremely effective. And they can be used in two ways. One, to spot levels of support and resistance. Actually, in three ways. Two, to place trades against them. And three, to know where to exit your trades. So I'm going to show you that. It's extremely simple, but extremely powerful. I'm going to choose any market actually at will. Let's choose this one. Basically what you want to do is you want to go, let's say in the past. I'm going to show that to you in the past. Of course, you don't really have to do it always in the past. You can do it as it is happening, preparing for the future. Okay, for instance, let's take these two levels. The levels I'm going to show you are levels in which the green cloud becomes red cloud, or the red cloud becomes green cloud. Those are specific levels of support and resistance that are invisible to the eye, yet will serve as important levels of support and resistance in the future. And for instance, what I'm going to do is I'm going to draw a horizontal line. For instance, this is a place where the green cloud became red cloud. So we'll put a line there. So let's take another one, another place where the green became red. Here is a one, and let's take another one right there. Let's take a line there. Okay, so you notice that this was with the cloud up until this level, right? So let's look what happened thereafter. Okay, we don't have to move too much to notice that this level here was the perfect support here. This level here was the perfect support here, but ideal, perfect, to the tick. You can see here, to the tick, and send prices up. And you can see this level here, how it worked as perfect resistance here, right? So notice how much in the future they still work. This level here work as support here, sure, but look what happened, for instance, yesterday with that decline. Prices were declining, and when got to this level of support, they couldn't handle it anymore and sent prices back up and formed that small body of the candle there. So this, I'm using a 6-hour chart. Can you use another time frame? Of course you can use any time frame. Let's use another chart. Let me not use this one because this one already has levels of support and resistance. So let's use this one. And instead of a 6-hour, let's use a different time frame. Let's use a daily. So let's go in the past to see if we can spot a level of support and resistance. Well, let's see. Here we have one. Let's see if let's use those two. Let's use this one right here. Okay, and let's use this one. Where was it? Right here. And let's check where or how did they serve in the future. Okay, so let's move to the right and look at the one below, how it worked as perfect resistance right here, then as perfect support right here. And let's see, well, it's too low for current prices. Let's look at the upper one. Well, this is amazing. Look, you can actually use this on a daily chart, for instance, and then move to a lower time frame to check them better. And look what happened here. This level of invisible support and resistance work perfectly for this recovery. So you knew that by making this, well, no, you didn't know, but you would have expected that by prices changing here, by using that trend line there, you would have expected that prices were going to, once it's penetrated that, we're going to continue, right? And besides that, once that prices recover, they were going to find resistance there. And that happened at any level. Let me eliminate this for a moment, and let's try with an hourly chart and see if you can spot the same thing. Maybe I should use a different chart so I can show you. Let's use this level here because this one is so labeled. So let's use this one here, and let's use this one here. You can be more precise when you put your lines, okay? I'm just going very fast to show you. Okay, and now we have those two lines. Let's see how those two lines worked. Well, they are too much above the current prices. So let's see, let's use another one that is below. Okay, right here. So you could see right there, if when prices were trading around here and they changed from bearish to bullish right there, then you could see, you could have put that line there and expect, for instance, this decline to stop there. And let's see where this decline stopped. Look at that. Isn't that amazing? It stopped prices there, sent prices back up, and when prices came down, they couldn't penetrate it, and it was only when we're able to penetrate it that prices were able to continue. And now, when it made that retracement, they found resistance back there again. It's a very, very useful thing that you can use in every time frame. And again, as I said, you can use higher time frames. Let's see if I can show you an example. Let's use this chart. Let me eliminate this one, and let's eliminate this one as well. So let's say that we go into the 6-hour chart for this one, and there we use the same case. Well, we know that prices are too far away from here, so they won't help us. Let's see on the daily chart if we can do that. Okay, here we have one level. Let's make that there. And where else? Here we have another one. Okay, so now let's check. We did that on the daily chart. Right now, let's go to hourly chart and see how that worked. Okay, and there it is. Look at that. To precision, to exact precision what the peep is. Really incredible. So I hope this helps you to spot levels of support and resistance, and to better spot trends with the cloud, of course, and then important levels of support and resistance that would be otherwise invisible, but that work with tremendous precision, and that can help you tremendously. For instance, if you are planning like I was planning here, look, I'm going to show you. Let me eliminate all this and show you what I was planning there. I had a 5-wave move here, 1, 2, 3, 4, and 5, and then was expecting an A, B, and a C, and wanted to go short. Where? Well, in this particular case, I had the channel there that allowed me to go short there. But imagine that besides that, I have that level of resistance there. That would be a perfect situation to go short.